till I'm starting to buy real, for real. In the back and calling up buy real, for real, for real. Started with the bottle today. I been had a thought in the day. Someone take this cocaine away, away, away. Oh, your name, your name, your name. Oh, your name, your name, your name.
Stock review. If you're watching this, don't share it. You're wasting your time. I've made a show in a while, and it's because I've been chasing liquidity, making money, so I can go ahead and take total advantage like I've been doing for the past. How long has it been since I've made a video? I would say maybe a month. I'm not sure. What's going on here? What you see before you is DRV. It's a product. It's an ETF, and I hold it. It's about 70% of my portfolio right now in quantity and in equity. DRN, which is another ETF, owned by Dextron. And as you see, they are closely connected, right? DRV is on the inverse. When the real estate is doing bad, DRV is doing well. DRN is a real estate ETF, same thing. When the real estate is doing good, then it reflects that. And then you see DXY. That's the dollar index. I'm going to run from right to left. To you will be left to right. DYX. A lot of people I listen to say that the dollar is being bled to death. It's losing value. And it has been, but not much. The difference between the 52-week high and the 52-week low on the dollar index is not a lot. That tells you that it is moving steadily. It is being supported. Looking at the chart here, you see DRN. And then we're on the 1 year here. And it very rarely peaks above the dollar index, as you can see. A small peak, and it goes back down. So overall, the real estate market is not doing well. It's not going up. It's not. That's not what's going on here. It's definitely steadily moving along. Dip here, dip there, moves up. But right now we're looking at 1, 2, 1 each quarter. May, June, September, December. My point is this. When the dollar is below 540, the real estate market value goes down. The rents and the mortgages go up because you can't buy as much with the dollar. As soon as the dollar breaks halfway on the resistance, guess what happens? It inverts. It almost inverted in between June and September, but it didn't do that. In between September and December, it inverted 1, 2, 3 times. I finally woke up at the end of the chart here. I bought it when it was way down, and I've been going up ever since. What I'm waiting for in this particular trade, in this particular asset class, is for it to invert again. Now, the dollar is beginning to go down again. It's above resistance. So when they're saying the dollar is being bled to death, that's hard for me to believe. But it will eventually go below 540. In the overall scheme of things, we'll just call that a resistance line, halfway mark. It will go into the negative, and this will switch it again. So I've been making money on the down, and I'm preparing myself to make money on the upswing. Now, let's get this straight. The day trading thing was sort of kind of dead a couple months ago. Positions that were held for a week, 3 days, which I did well doing that. It's not going to work in a market of this type of volatility. Now, I see a lot of shows and people are talking about 401ks, investment plans. I run my own accounts. I don't trust a person to run my account. Really, I don't. So, snapshot here. What I'm looking for is another one of these inversions. So I can jump into DRN with the money I made from DRV and ride it on its way up. And eventually the dollar will rise above resistance and we'll have a flip again. 5 year. You're not seeing much of a flip here. Over 5 years, the real estate market has been going up. Or I should say, being steady. But as you can see, we have these particular drops here. And then at the end of the chart, you're seeing what's occurring. The dollar is still above resistance. The real estate market is still strong. These signs of panic are unwarranted. I don't know if they're doing it to get more hits on their video, or I don't care. And like I'm saying, don't share this, because I'm not trying to ruin someone else's hustle. But in the reality of things, we have seen dips in the real estate market throughout this 5 year period. Back in 2014, we see that even the 5 year chart shows an inversion. So what we got going on here is, over the long term, you really want to be into DRN. At this particular time, I happen to be into DRV. It's, over the 5 year period, it's down 80.59%. Over a 5 year period, the dollar index is up 20.24%. You see the numbers right here. As we creep to the 1 year, we begin to see more detailed swings in the real estate market. 6 months, you begin to get a better picture of it. As you see here in the 6 months, this wide swing here, DRV is almost headed off the chart, and the real estate market in the positive is down almost off of the chart. This is where I'm at right now, up there. So I'm expecting And you can see the pattern right here. It's clear as day. Watch the dollar index. It goes below resistance. You need to be watching for DRN. I'm gonna expect that to happen on the normal, in the real world. If I could go max, which I haven't done yet, just to back up what I'm saying. Okay, these two ETFs obviously came about after 2008. The dollar is below resistance. What's going on? Real estate market is up. DRV is down. Let me take you through this whole cycle here. I expect sometime in late January for the flip to occur. Excuse me. Which brings me to, let's see if I can't do a little bit of something here. Get me out of the way, y'all. Annually capital. They are big in real estate derivatives. In order to fuel the real estate market, it's at the top. They're going to have to put out new loans. Let's take a look at this. And I'm going to show you the parameter, the margins of win and loss. They made new lows. New lows. They're ready to make some new highs. According to the big guys upstairs, there's plenty of liquidity in the market and they are ready to unleash it. I'm getting ready to take advantage of that. But I'm not ready to buy yet. I'm not going to buy annually capital until, because I think it's going, as you've seen in that, it made new lows. It's going to make more new lows as time goes on. As of Tuesday, that's the low that occurred. It's going to go down lower. It's going to swing and make new highs. So I'm waiting for the new low before I buy. The thing is this, ladies and gentlemen. I have not had any problems with this market going down because I buy as close to the 52-week low as I can get. That is doing well for me. Now I'm advancing and I want to buy at new record lows, which everyone is predicting. Um, as you can see, let's go to the dollar. Let's see, the dollar was bled to death. I've been looking at 96, on the dollar forever, or since I've been doing this. The dollar was bled to death. Let's see. The day's high on Tuesday was $96.81. The 52-week high is 97.71. The 52-week low is only 88.25 bucks. A range of 0.35%. Or roughly put about $9, $10 is the range on that. I wouldn't even, buy that. I just watch it. That's not enough volatility for me. So when you're looking at a $96 stock, a $97 stock, and the range in the volatility is $10, I mean, I personally, in this environment, I wouldn't even hold this. VVIX, short-term orders. Let's get this right before I start opening my mouth. Let's skew through this. Take a look. Take a look at reality for a second. Okay, so VIX, short-term futures at 49 bucks is up 4.64%. Long-term VVIX, long-term orders is up 4.94%. What does that mean? Short-term, long-term orders are being made. Look at the VVIX stock. It's over 100 bucks. Look at VVIX. It's 49 bucks. I don't get it, because just a few months ago, the same guys that were saying that the market is down, 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 these same guys were saying that you want to take the other side of the trade. Guess what? I'm bull right now. Every single clown I talk to is a bear, or I listen to. It's bad. It's crashing. It's the end of the world. I get if you want ratings, and I get if you want to sucker people. That's the game. This is smart money manipulating dumb money. Those of us who can see through that and have been listening and doing this for any amount of time, and I'm talking about a year to 6 months, and you listen closely and take your personal opinion out of it, this is the one time that the idiots have it right. I don't know if it's, and I'm going into politics now, I don't know if Donald Trump fed these guys some truth serum or whatever, but as you can see right now, The market is stable. It's reevaluating itself. And it's doing what it does that shows in long-term trends. So check this out. Everything's doom and gloom, I see. Or I hear. Dollar's up 0.19 hundredths. International involvement in the U.S. bond market is up 0.26 hundredths. I haven't seen things more stable, is my point. It's running against crude oil. The dollar is so strong that crude oil is cheap. Somebody's doing their job. I think that's Mr. Donald Trump doing his job. Let's take a look at these short-term, long-term orders here. Let's take a look at this mess. Take a look. Get all the emotion out, and let's take a look. I'm going to throw in Vanguard Total International Bond ETF. It looks like short-term orders and long-term orders are just fine. Just fine. If you look at the 5-year and long-term orders, they're doing great. The international involvement in the U.S. bond market, doing great. I mean, no problems there. I do hold all these. The only one I'm really regretting is Ford Motor, and that's only because I should have waited to buy it at its all-time low. See, everybody has been down in the dirt because they want to buy midway in the cycle, 52-week cycle, and then when it goes through its volatile path, they look at their statistics, and their statistics suck because they weren't patient enough to buy at the low. They're trading against the market, not with the market, and that was one of the things I learned very early off. This is aware here. They do artificial intelligence. It would take a total collapse in the market for me to actually lose. Once again, I waited for the lows. How often do stocks actually reach their 52-week lows within a trading session or a quarter? Not that much. And if a stock reaches its all-time low, I don't even do technical analysis anymore of any particular stock. I just trade the market now. I don't have time for that. This is a artificial. Let's go to what this is profile. Let's go to what this is, and this is how I know. Aware Inc. is a provider of software and services in biometrics industry. The company's software products are used in government and commercial biometric systems to identify and authenticate people. Well, what did we see on that magazine cover? I forget the name of it. You see Donald Trump on one of the pictures on there with a biometric scan going on with his features. Well, to me, it seemed like a pretty good stock to buy at its low, so I bought it. Plus, biometrics is becoming a big thing in China, as you saw in my previous video. No problem. Ford Motor, I hold it, and it made all-time lows, but it didn't go too far below what I purchased it at. And plus, I only hold a couple shares of that. I just needed to get rid of some change in the account, so I bought it. And Qantas Farmer makes kidney disease medication, which I believe the stock market crashing, or so-called crashing, going up and down, it's got a lot of people drinking, so I plan to make money on them too. We talked about annually capital. I hold dollar bearish, and it made new lows, a little bit below what I bought it at, but maybe like 0.03%. So all the stocks that have reached below their 52-week lows and may make new lows, I'm going to continue to buy them. As I'm watching DRV go up, ultimately before it reaches its peak, all the dumb money is finally going to see what I'm seeing, if they haven't already. I'm going to sell. And then I'm going to pick up which is, check this out. The 52-week lows. In this Dextron Daily MSCI Real Estate Bull 3 times ETF are the 52-week highs for the adverse. For the bear. My point is this. If you've been doing studying on how to do this, and I notice there's a lot of new people jumping in, making shows, They jump in, they want to highlight how far the market has gone down. Yeah, if you're running a regular 401k and you're in this volatile market, I can see where you could be stressed a little bit because you're not making as much as you could be making if you were managing your account on your own. I get that. Most people want to sit down, watch TV, party, whatever, enjoy life. I'll tell you, you need to listen to Anton Krill. You need to listen to Greg Mannarino. You need to listen to Financial Turmoil Explained. Because the simple fact of it all is, and I've talked to a couple people, financial advisors that run defense contracting companies. Even he said, in today's environment, you got to watch your money. And I'll throw a name out there. If you can forgive me, Mr. Sebastian. The gentleman's name is Brett Sebastian. Very good guy. You gotta watch your money. You gotta watch your investments. Subsequently, I liquidated my silver maybe 3 months ago to go shopping with my kids. Haha. It was at it wasn't moving. I didn't lose money on it. I'll tell you, if you're a silver stacker, I'll give you some tips. Never sell back to the dealer. Never. You sell it on eBay. I usually make 20-30% on my silver if it's up or if it's down. I don't leave my silver in these little plastic things. I throw it in my pocket. It's silver. And one last thing I do want to... This is artificial intelligence here. I haven't bought yet, but let's see why. It says 52-week low. I'm showing you what to buy right now, basically, guys. Is artificial intelligence going away? Let's think about that for a second. No. Is it affordable? Yes. Is it at its 52-week low? Just made it yesterday? Yes. Buy signal for this one. I'm expecting it to go lower. This is how you calculate this. If a stock makes a new 52-week low, then you can expect a new 52-week high somewhere in that non too far off future. What you see now is the bubble being slowly deflated, and it will be inflated. It will be inflated slow. I don't know. I expect them to inflate, reinflate slowly. Yes, the market is on a respirator. And how do you revive someone? How do you get the heart of an economy going? Inflate, deflate. It's what? Liquidity. The Fed is doing the right thing right now. And the bad guy, good guy scenario that Trump is playing, it's working perfectly. Trump criticizing the Fed is a dog and pony show. So I'm gonna leave you at that. I might make another video in the not too distant future about the international markets, which I haven't been watching that much. But let's get back to reality, and I'm gonna leave you with this. Out of all the markets, the Dow Jones Industrial is the lowest in volume. S&P is next. Next highest one that is breathing is the NASDAQ. All the trades I've shown you that are at their 52-week lows, majority of them are tech. So if you're looking for confidence, if you're looking for something that's not swinging so low, invest in the NASDAQ. Your tech companies, these things are not going away. Artificial intelligence is not going away. Robotics is not going away. Matter of fact, speaking of robotics, let's look at some robotics. Where is robotics hidden? I love Dextron. I love their starts. There's U-Bot right there. Hold on. New 52-week low made in robotics. Let's go through the same matrix. Are robotics going away? No. New 52-week lows, guys. I'm showing you the buys, showing you the information, showing you the applications. And there you have it. Thank you for tuning in to Stock Review. I appreciate your time.